Hello and welcome. My name's Andy Crook, and tonight's training topic is Know Your Numbers, Know Your Business. A little bit about what we're going to discuss tonight is simply we're going to look at what numbers you need to be measuring in your business and what numbers are important to your business. We're going to answer basically three questions. How to identify the numbers you should be measuring. And I'll give an example of 10 that we've measured in our business. Then we'll have a look at how do you value your business. And then we're going to look at how do you keep track of these numbers. So it's a fairly simple topic tonight. How did this subject come about? Well, a little while ago, I wrote a program, a training topic for business owners called the Business of Diagnostics. I believe the course is unique. I don't think anybody else out there is talking or runs a training course about how to go about the business of diagnostics. Having researched the information to do that course, the natural progression was to look at how to improve my own business, which is what I set about doing. Now I'd like to share that information with anybody who basically wants to log in and watch a video. So let's get started. Know your numbers, know your business. So why do you need to know your numbers? Why is it so important? Well, the best example I can give is probably the TV program Dragon's Den. Have you ever seen a really, really good pitch where the business owner or owners gets up there, they seem to have a great product, they know all about it, they've done all the research on their market, and then the dragons are obsessed, and these guys are pretty good at business, that's probably why they're in the Dragon's Den, and they're about to give away some of their money to help a potential business. And people, no matter what else has gone on before, they seem to come unstuck when they start getting asked simple questions about their numbers. And this has always struck me as being somewhat peculiar because surely everybody knows these basic figures that the dragons ask. However, it appears it's probably not that common that for people to know them. So I started digging into these numbers when we started to put together the course for the business of diagnostics. And I took the numbers for the business of diagnostics and I sort of separated diagnostics as a part of the business. And I looked at the numbers around that. But it's quite simple to extract those numbers into your whole business and look at things over a period of a year, and then break that down into quarters, break that down into months, and then you're going to have the numbers that you require per day. Now, the idea is that most small business owners simply don't know what numbers to track. So probably the first thing to identify is the what numbers should you know. So obviously, the first number that everyone should know in their business is profit. Yeah, profit. Yeah, I said that, profit. I said it out loud. It's almost like we're embarrassed about profit, but profit's not a dirty word. Crevice is a dirty word. So what I'd like to talk about is, and all of the subjects, so the 10 things I'm going to talk about now that I've identified, and I'm going to then show you how I identified these as being important in my business, and how you can apply some of maybe the things into your business and look at what's important. There'll be training on these subjects if there hasn't been training already, where you can look at into the facts and figures around it. But I'll briefly outline the information for each one. So profit is split into two sections. You have gross profit and then you have net profit. They're both really, really important. They're both separate figures, but they come under the headline profit. You need to know whether or not your business is profitable. There's a training coming up on the profit and loss financial statement, which is an interesting document, and a lot of people rely on that to work out whether or not they're profitable. But it doesn't give you the whole picture, and we'll talk about that in the future training. So, the first thing you should keep an eye on, or you should have it should be measuring and know the number of, is your profit. Now, I did a little bit of research recently into net profit, and there's very little available out there for businesses in the UK, but in America, the average small business, which we probably call a micro business, less than 9 staff, turnover of less than $500,000 a year, as a net profit of between $1,000 and $7,000. That's not much. That's not much at all. So that's a number that we really, really ought to be sort of aware of, and that and in future training, what we'll cover is what is a good gross profit margin and what is a good net profit on your turnover. So, handily enough, the next number that I identified as being important in my business was income or turnover. That is all of the money that comes into the business in a period, typically a year. But it gives you an idea of how much money is being moved through your business. And it's obviously something you need to know to work out your profit. So the next thing about what comes from turnover, the next sort of number that you need to get involved in, and we've talked briefly about it, is sales. So the turnover comes from the number of sales you do. So the sales information, these numbers are really important. So the number of sales you do, the average sales value, are the next two numbers that you really need to know, because these are things that you can look at and start to improve, but you can only really improve. You can only measure where you are if you know the number in the first place. So if you know your turnover, you know your sales that generates that turnover. To work out your profit, you need to know your expenses, which stands to reason. So these first sort of five come in sort of order, because you need to know each one to work out the first one, which is profit. So expenses, the actual cost of doing business, and this is a number that's easy to work out from your accounting software. However, most businesses, they don't include all of the expenses incurred in doing their business. So that's another one, and we'll look at this in more detail in another topic. But that's the next number that I identified. Once you've got the first four, as we've identified, the fifth is cash flow. Now, we've already done a training topic on cash flow and cash flow forecasting, so we understand the importance of cash flow and how businesses fail because of cash flow problems. Now, cash flow, we'll probably do even more training on this going forward, but cash flow is the money in and out of the business in a period. Typically, most people do it over a month, and it just a profitable business can still fail because of poor cash flow. So that's something to bear in mind, and we want to know what our cash flow is, how long it takes for money to come back in that we've spent on other things, and every business is slightly different. So once we've got those sort of the big five, if you like, the next thing we need to look at is debt. Because often when we start looking at financial documents and how finances are reported for tax purposes, etc., debt's often missed. So how much have you borrowed? And alongside debt, we should look at how creditworthy the business is, because we may need to raise finance. So they're the next two that go hand in hand. So debt and creditworthiness is the next one, number 6. So then when I started then looking at my own business, the next thing that I saw, which isn't directly sort of a sort of direct financial measure, but it is a number all the same, is hours sold. Hours sold. What I call business efficiency. And we'll do a training topic on this, but to briefly put it into sort of a sentence, it's how many hours you could sell. That's not with your current staff. That was if you fully staffed your business. So I look at it as number of bays stroke number of ramps. If each one of those populated by a technician, how many hours could you sell against how many hours you are selling? So the business efficiency, I call that. So that's a number that you could be aspiring to, because you may have more bays than you have technicians. But it's a good thing to look at, because it gives you an idea of how much the business could be doing, and therefore you can look at how much you are doing and work out a ratio and efficiency based on that. So the next one is parts margin. How much are you making on your parts? And now we'll do a training topic on margin and markup, because people often get these confused, and we look at some of the sort of the industry numbers and how you can calculate the two different ways of adding value to your parts that you buy, and that is an important number in a business, because you'll be surprised that quite often you're not making as much on your parts as maybe you think you are, or as much as you should. So number 9 is your labor to parts ratio. So what is it on an average sales invoice? How much of it is labor, and how much of it is parts? What is the ratio there? And is that something that's in sort of normal for you and your industry, or the part of the automotive industry you're in, or are you abnormal? Is there something about what you're doing that's different that could be improved? And that's a really good number to know. And the final one that we looked at, we looked at the cost of customer acquisition. How much does it cost us as a business to win a customer? Because what you want to know that number for, and why that number is important, is because it gives you an idea of how much you can spend to win a customer. When you look at then lifetime value of a customer, and you start looking at how much it costs to bring that customer to you, if you can keep that customer, how much how much of a percentage of the lifetime value are you willing to spend to win a customer, which is sort of a training topic for much further down the road, but it is something that you should know, is how much does it cost to win a customer. Because often we only look at that single job, that one invoice, the job that you're doing today for that customer. But if you start digging into how long a customer stays with you and what we call their lifetime value, you'll be surprised that you can kind of let the odd bit slide if you need to. You can do stuff to sort of to grease the wheels with a customer if things are getting a little bit sticky for whatever reason. So they're the 10 that I identified. But how did I identify them? Well, I looked at the business as a whole, and I used my plan. And we've talked about business planning in a previous topic. So if you haven't seen that, it's worth looking over it, and we'll sort of do a deeper dive into business planning as the topics keep going forward. But if you start off with your big vision for your business, that they will give you some ideas of where you need to be, and then when you bring that vision down to your 3-year plan, you start fleshing that out with some numbers. What you'll find then is where you sit now as opposed to where you want your business to be. And then when you start adding those numbers in, you need to find out how you're going to achieve that, and then you start measuring specific things within your business. Now, as much as I love data and I like looking at spreadsheets and numbers, and that's kind of my area of expertise, if you like. I'm a data scientist, or a data engineer, for when I go motor racing. I do lots of stuff that's nothing to do with the automotive trade, that are to do with looking at huge, great big spreadsheets. That's kind of my thing, if you like. I know that not everything can be put into a number. Not everything can be classified by a number. However, there are other things inside the business. When you start looking at your vision and how you want your business to look, you can't really put that in a number. Maybe you can score your business. How happy am I with the visual appearance of my business on a scale of 1 to 10? But they're difficult things to put numbers on. So whilst I understand that, knowing your numbers makes your business sort of more manageable, because you can look at where you are, and you sort of have a virtual scoreboard, if you like, of how far are you away from where you need to be, which then gives you the ability to plan what you need to do to get there, which is the great idea behind knowing your numbers. This is why when you see it on Dragon's Den, what they want to know how much that business owner knows about their market share, how much income they're going to get, and therefore bolted to that, the value of their business. Because when they say, I will give you, I'm asking for X percent of my business, so they'll say, I want maybe £100,000 for 10% of my business. What that means, they've just valued their business at £1 million. That's what it means. And tragically, in small business, most small business owners vastly overvalue their business. They vastly overvalue their business because they don't know how to value it. So the second answer to the question is, once we've identified the numbers we need to measure to hit our targets and our vision for our business, the next thing we need to, I said I'd try and answer for you, is how do you value your business? Well, it's really tough. One way is to get someone in to do it, a professional. That's probably the best way. If the valuation is being done for free as part of selling the business, or somebody who phoned you up one day and said, oh, we'll come and value your business for free, should you want to sell it, the valuation you'll get is probably, and this is me being quite general here, but it's probably going to be overvalued if it's being done for free. If you're paying a serious amount of money, and by a serious amount of money, I'm talking somewhere between £500 and £1,000 for a professional business valuer to come out and audit your business and give you a valuation, you're probably going to get a realistic market value of your business. Now, if, and this next sentence isn't meant to upset anyone or to try and panic anyone, but if you're involved in your business and your business is in what I termed infancy when we did the stages of business training, if you haven't seen that, take a look. There'll be a worksheet or the video to look at. If you're in infancy, which means the business doesn't work without you, your business is worth next to nothing. I'll say that again. Your business is worth next to nothing, because what you're asking someone to do is buy your job, which is, I'm sorry to say, it's all too sort of familiar state of affairs when somebody comes to the end of their time in their business and they're ready to leave. So what you're asking them to do is buy your job. No one wants to buy your job. Therefore, your business isn't worth very much. So if you have managed to systemize your business, as we talked about earlier in an earlier training subject, and we'll do more training on this, and your business runs without you and you have a true business and not a job, your business is worth something. It has a value. Now, the business on its own, so we're not talking about the buildings and the contents or any assets to do with the business, just the business as a going concern, is valued in most cases by the adjusted net profit times by a multiplier. So the adjusted net profit multiplied by a multiplier. So for a typical small to medium size enterprise, that multiplier is 2.5. So 2.5 times your adjusted net profit. Now, adjusted net profit, once again, we'll do a training subject on this at some point. But basically, it's your net profit, which is the first number that we said you needed to know. Your net profit. But if you're, as a business owner, you're taking money out of the business in certain ways, or there's projects on the go so that are not typical during the running of the business under normal circumstances, some of these numbers can be added to the profit to give you an adjusted net profit, and then that number is multiplied by 2.5. So if you know what your net profit is that one of the numbers that you know, times that by 2.5, and that is an approximate valuation of your small to medium sized enterprise. Now, what that doesn't include is the value of the building or the assets. Now, the assets, in most cases, have more, just over scrap value. Sorry to say that as well. Most people think, oh, I'm going to be able to sell all this stuff. It's very, very difficult. Yeah. So to sell a used ramp for anything like what you think it's worth. So think about that on the scale of everything inside your business. So the contents of your building, even if you're selling it on to somebody who's going to run it as a garage, probably aren't worth as much as you think. But the building will have a value. And if the building is being sold as part of the business, that is probably the biggest value your business has, unless you're turning over a great amount in net profit, and that net profit times 2.5 is a bigger number than the value of your building, which is probably unlikely. Now, as your business increases in size, and it becomes more than a sort of SME, and it gets sort of bigger and bigger, if you're doing more than £1 million in turnover, the valuation I've just suggested probably doesn't apply. But most people watching this, I'm guessing, aren't in that kind of category. Otherwise, you wouldn't be asking or looking for business training from another small business. So you'd probably be out there with the big boys. So the final thing is that I wanted to talk about today, just before I finish, is how to track your numbers. Well, the easiest way is to use your accounting software and your garage management software. Now, if you're a really small business and you don't have accounting software and you don't have garage management software, is you can set up an Excel spreadsheet or Google Sheets or any kind of spreadsheet type software program, and you can start tracking them yourselves. For example, I do my cash flow forecast just on a simple spreadsheet. I look at the money in and out of the bank on a daily basis, and over a period of time, I build up a picture of how cash flows in and out of the business, and that's how I do my cash flow forecasting. How I know how much turnover we need to do each month, how much cash we then need to bring in from that turnover, and then know how much money we've spent and how much money we've brought in, and that's the essence of a cash flow forecast. And it's just a simple, very simple spreadsheet. Money in, money out. And you can do that for lots of these things. But I guess with the amount of software systems out there nowadays, most of the numbers you need to track in your business will be available to you in some format that you may need to put into a spreadsheet. But that's all it takes. It doesn't take much. We're only looking at maybe 5 or 6 separate spreadsheets at most, probably 3, because the first 5 come off your accounting software. So they can all be done on one spreadsheet. So that's how you keep track of your numbers. And hopefully the training has been informative, and hopefully most of those numbers you already are aware of, even if you don't know exactly what they are today. But remember, when you get those numbers, they can seem really, really big and confusing. But if you break them down, and the easiest way to break your numbers down is look at the number for the year and then break that down by dividing by 4 for your quarterly number, and then divide the quarterly number by 90 to get your daily number, or if you want to do it monthly, by 30 to get your monthly number. And then you'll end up with a number that's more manageable. Every day, what do I need to do? And that's how you get to knowing your numbers. Hopefully this has been of interest, and I've helped somebody out there. Please let me know in the comments if you need any more information, or ever just reach out to me, direct message or whatever. Thanks for your attention, and I hope to see you guys soon. Bye bye.